Hi everyone, August Biniaz here with CPI Capital. I'm joined by 𝗖𝗽𝗶 Benesocky. Welcome, Eva.
Thank you, August.
We host the CPI Academy YouTube show dedicated to adding value to our investors' investment journey, our viewers' investment journey rather. We bring on experts and discuss all topics related to real estate investing. Please subscribe and like the video. We hope you enjoy.
Wonderful. Thank you, August. And hello, everyone. Today we're joined by Liz Lamond and Jayson Lowe, and they're going to be discussing the infinite banking concept. So welcome.
Liz, welcome. Yeah.
Thank you.
Absolutely. Yes.
Thank you. It's good to be with you.
Great.
Wonderful. So we're just going to jump right into things. Really happy to have both of you on today. Why don't we start off by each of you taking a moment to tell a little bit about your background, please?
Go ahead, Liz.
Okay, sure. So I am a real estate investor myself, and I was doing that for many years, but a little frustrated because I found that I wasn't making the kind of progress that I wanted to be making with it. And so part of that was, a realization that my money should be doing more than one thing at a time to really sort of fast forward progress. And I actually came across this concept about 6 years ago now, I believe, and started implementing it in my own life and saw what an amazingly powerful tool it is and how it can really have a big impact. And so then, I wanted to teach it to other people and help educate people on this concept so that they can get similar benefits. So that's kind of, my journey with that. And, my own system has grown and I use it with my family and myself, and use it for all sorts of things, including real estate. So yeah, it's we'll go into details in a bit, I'm sure, about what exactly all that means. But that's kind of how I came to this point, and now I work with Jayson educating people on this process. So yeah, lots of fun.
Thank you for sharing.
Thank you for sharing.
Liz is a sharp example of, someone who catches this concept, this process, puts it to work, and was inspired to the extent that she wanted to begin sharing it with others. And so she was a client before becoming an authorized infinite banking practitioner through the Nelson Nash Institute. And my journey began with this process back in July of 2008. And prior to that, I was an active real estate investor. And fast forward to today, I'm involved in real estate, but more from the financing aspect of it versus acquiring property, looking after the property, making sure it's fully occupied and cash flow positive and all of those great things. But I provide capital. And so it's a great position to be in terms of total and absolute control, especially as it relates to this process. And investors get the privilege of having both. So they get to expand their portfolio, grow their wealth, but also be in a position of total and absolute control. And I'll tell you, this journey over the past 13 years with this process for me has been nothing short of remarkable. And we've assisted thousands of Canadians across the country, coast to coast. And this concept is really starting to gain steam thanks to the YouTubes and the Facebooks and the social media platforms that we get to, and are very privileged and honored to be invited to speak on channels like yours and programs like yours. And so we're very grateful to be here with you today. And I founded in the Ascendant Financial Organization. When I founded the company, the whole premise was to be able to grow a team of great people so that we could specialize in the implementation of this process of becoming your own banker, the infinite banking concept that was pioneered by the late R. Nelson Nash, someone that I was privileged and very fortunate to be mentored by for several years. And so that leads us to being together with all of you today and all of your listeners. So it's great to be with you.
We really appreciate a bit about your background. And it's great to hear that both of you started, your background was in real estate, and then realizing this process and then coming on board to do it. And that's the stories we hear now on the active real estate investing side as well. We have some investors who've started out passive, but then actually became active operators, and they're doing great. Some of them happen to be our partners. So it's great to see that transition 100%. and creating a niche or niche, however you want to pronounce it, and then focusing on it. So we'd love to hear about it. Tell us more about
this exciting infinite banking concept, please.
Yes. Well, okay, your viewers and listeners are in for a treat, honestly, because when you think about it, the essence of this process is to recapture the interest that you presently pay to banks, to credit card companies, finance companies, for all those things that you need throughout your lifetime. but equally as important, it's having that capital flow back to you versus flowing away. So as it relates to a real estate investors, our experience has been is that they're growing their portfolio for a deferred benefit. And we share with the real estate investor, you don't have to defer the benefit. You can take control of the financing function as it relates to your real estate investment activity, so that not only are you putting tenants in your properties, they're paying you, they're paying off the traditionally the mortgages. But if you just carried through that path and you just carried on in that journey, someone else's bank is getting all of your money. And it doesn't have to be that way. We talk to real estate investors all the time who say, yeah, I've got a buy and hold strategy. My objective is to get these properties paid off for pure passive income. And that's great, but who's getting all the money? It's flowing through your hands and mine at some point, but it's always ending up in someone else's system. And so by implementing this process and taking control of the banking function as it relates to your needs, you can not only enjoy the benefits of real estate investment, but you also get to control that vital function of financing. And I haven't talked to a single real estate investor yet who has said, you know what, my entire journey of acquiring capital to build my portfolio has been nothing short of amazing, right? They're telling us I got to deal with, lengthy, nosy credit applications. I have to explain to the finance company, the bank, why I'm doing this. I have to personally guarantee the debt. I have to go through all of these hoops and gatekeepers and toll takers who all end up abusing these people. Has that ever happened to any of your viewers or listeners? I'm positive that it has.
Pretty sure.
And so,
we talk about it all the time, the difficulties that exist here in Canada when it comes to the financing and the mortgage laws, a lot of other factors. Yeah,
yeah, you bet. And so if you're able to build an aquarium of capital, and so what we're talking about, the tool that we use to implement the process is dividend paying participating whole life insurance contracts. Now, it should interest your viewers and listeners that banks, commercial banks, are the largest purchasers of this tool on the planet. It's a tier 1 asset. Now, why would they be doing that? They either know something that you and I don't, or they're incredibly dumb. Which one do you think it is? And this, if you go check with Uncle Google, it's called bank-owned life insurance, BOLI. Now, why are commercial banks purchasing this to the degree where it outpaces the value of all the real estate the banks own combined? Why would they do that? It's because they understand the strength of that tool, and that when you grow capital on a daily basis on a foundation of contractual guarantees, opportunities are going to track you down. And if you can take advantage of an opportunity instantly without having to go through the gatekeepers and the bankers and that whole time-consuming, frustrating process, then you can achieve what our clients are already achieving, which is that peaceful, stress-free financial life. And it has to be done incrementally over a period of time. We live in this society of instant coffee, instant food, instant everything. Your wealth building journey is not a microwave oven. It's something that takes time. And so we work closely with our clients. We coach them and mentor them through this process. And Liz, again, is a sharp example of someone who actually practices what she teaches. Liz, can you expand on that?
Yeah, for sure. So for me as well, with relating specifically to real estate, I found it frustrating that often that money that I put aside for buy and hold property wasn't actually doing anything, but I needed it as a just in case. But, everybody knows we're not earning any interest on money right now. And so, all of that just in case money could have been used, better, but I didn't want to do that in case I did. And I had a situation actually quite recently where I used my policy. I paid back some of my policy loan, which we'll talk a little bit about how that works in a bit, but I paid back with some capital that I had received, but I had no concern about not having access to that money. Whereas if I'd paid that down on a mortgage, I would have had to go in and reapply for the money or done something quite different. It would have been a whole process to go through to access that money again. And wouldn't you know it, a month later, I had a big blowout in one of the units and I needed to access that capital. So I just turned around again and took out a policy loan. and was able to solve my problem. So, you know, and then the tenants can continue to pay down that capital that I borrowed. So just the reduction in stress, and also knowing that my money is in a place where it's growing daily, just makes a huge difference in terms of not only my progress, but in terms of me managing the real estate that I'm dealing with as well.
I love it.
Love it.
Great, great. So now
Infinite banking.
let's go ahead and try to use a case study. So,
Sure.
and Ava, with her background in real estate, and myself in construction and development here in Vancouver, we are very familiar with the I would say the conventional Vancouver or the Torontonian real estate investor. They have a primary resident that's pretty difficult to kind of purchase with median home prices being so high and the condo prices being so high, but they have that property. Now they invest in a secondary property and they have that rented out, hoping to be cash flowing at some point. Now that depends on how much down payment they've put down. Where does this process come into effect? Is it prior to them purchasing that secondary property? Is it after they've purchased it? Walk us through an actual case study of when do you guys get involved, and in that process of investing, when you get involved to make the process come alive?
Absolutely. I'll share just a real example with you. In fact, I'll share a couple of real examples that will resonate with your audience. The first is my own. So back in April of 2008, you could still get 40-year amortizations on a mortgage. And so my wife, Rebecca, and I thought, wow, this is terrific. We had a great rate, an incredibly affordable payment. And that was in April of 08. And so we happily signed on for this 40-year amortization, thinking this is fantastic. And then in July of 08 is when I was introduced to this process. Now I decided to take action. I was determined to implement the process. So I got underway before deregistering or liquidating all of my existing real estate, which happened incrementally over the next couple of years. But what I recognized is that by implementing this process, I could get rid of the commercial bank in a much shorter period of time. It took my wife, Rebecca, and I 7 years to get rid of the commercial bank. The first person I called was R. Nelson Nash. And I said, Nelson, I've got some great news. We got rid of the bank. And he said, don't celebrate too soon. You have to be an honest banker. You have to finish the original loan schedule that you agreed to pay to someone else. So that payment that we would have otherwise still been obligated to this day to be sending to one of Canada's largest commercial banks, that money's coming back to us now, not flowing away from us. And the policy loans that Liz described, if you relate this to my situation, when we requested a policy loan from the life insurance company, they only asked us 2 questions. Do you want the money electronically deposited, or can we mail you a check? That to me was peaceful, stress-free, and it's an unstructured loan. I get to repay that policy loan on my terms, not anybody else's. And we've since moved into our new home. We kept the property that we got rid of the bank 33 years ahead of schedule. That property is now occupied by tenants who are paying us the payment that we would have been transferring away to someone else. And so it's all about where the financial energy is flowing to. Now, I'll share this with you. Most recently, one of our clients who is a very active real estate investor, his niche is fourplex units. And when he first was introduced to this process, he already owned 5 fourplex units. Now, the mortgages were the balances were being reduced by the rental income from his tenants to the degree where he only had 1 fourplex unit left to pay off. He had 13 years left on the amortization schedule. He began to implement this process. It took him 3.5 years to get rid of the commercial bank on that remaining fourplex unit. All of that money that he still would have been continuing to transfer away from his family to someone else's system is now flowing back. And since then, they've been able to purchase a property for their daughter and son-in-law. Those children did not have to go to someone else's bank. They didn't have to shop outside the home. They were able to purchase the property free and clear using a policy loan directly from the life insurance company. So now the money's really truly being kept in the family. Both are paying mom and dad. They get to use the money and they keep it in the family. That's what it's all about.
Very cool.
Because let me share this with you. If you just continued transferring money away, And even if you're sending extra payments to the lender to buy down the mortgage balance faster, whose margin of safety are you increasing? You're increasing the lender's margin of safety, because the real asset to the bank is the stream of payments, not the asset that you purchased using their money. And so every extra dollar that you're sending from your own capital outlay to that lender is increasing the lender's margin of safety, not the investor's margin of safety. And so if you're looking for increased margin of safety, cash value that's rising on a daily basis, uninterrupted by any stock market volatility, real estate market volatility, there's no government intervention, there's no pandemic that can take away any of that accumulating value away. And you get to borrow against that accumulating pile of money without interrupting its compounding growth and still achieve your real estate investment objectives. How much capital do you want residing in your own aquarium? The answer should be all of it.
Yes.
Isn't that good?
No, for
That's
sure.
very cool.
As we hear you talking about these points, they all sound very great. Now, as soon as you hear life insurance, the first thought that comes to mind is qualifications.
Right.
So somebody for life insurance, depending on their age or their health situation, they have to qualify for life insurance. So does that come into effect for an applicant when they're looking to bring on such a policy and using
it? Does. Yeah, that is such a good question. Thank you for asking it, because the answer is yes. And what we see in the real estate realm is joint venture partners who are insuring each other's lives for the purposes of not only implementing the process of becoming your own banker, the infinite banking concept, but also to make sure that, God forbid, if something happened to either joint venture partner, knowing that they're both jointly and severally liable for the debt outstanding in the assets that they purchased, there's more than enough tax-free windfall that shows up exactly when it's needed the most. And the surviving joint venture partner can carry on and buy out the deceased joint venture partner's interest in the property, taking care of the surviving family immediately. And I always ask this question: what is the best definition for you of what is the ideal investment? What is your definition of the ideal investment? Well, my response will always be one that pays the most when it's needed the most. And if the person applying is not life insurable for whatever reason, declines are very rare. But if the person applying is not life insurable, that's okay. If you have an insurable interest in someone else, you can be the policy owner and control the policy, control access to it in terms of capital, policy loans, death benefit proceeds, and so on. And that's why it's important to work with a good coach. And Liz is the right person to connect with on my team. She's a great practitioner because she practices what she teaches. That's so important. And she can relate to the real estate investor because she is one herself.
Great. Yeah. And to you, Liz, could you please, I guess, walk us through the first investment you made using this policy, or the first client you helped to invest through this policy? How did that look? Where was the start? Is this a policy where can the debt be borrowed from the policy, or is the debt still coming from the bank? Where does it take effect? Is it on the equity side? Is it on the debt side? Walk us through that part of it.
Yeah, sure. So, I mean, as Jason mentioned, you know, this is not a quick solution. This is something that people need to build up their capital over time, and so often when people, it depends how quickly people are wanting to start and what their objectives are as to the amount of premium they put in. So people can choose the amount of premium they deposit into the policy, and that's going to change the amount that they have available. In terms of how the policy loans work, people can borrow as collateral against the cash value of the death benefit. So it's not actually their money they're borrowing. Their money is continuing to grow inside the policy every single day, and they're actually borrowing the insurance company's money to take a policy loan. So doing that, an example would be clients, it just depends what their objectives are. So I have a client that comes to mind who was flipping houses. And so he was able to take a policy loan in the first year for part of what he needed. And then because his cash values are growing every single day, he was able to take a policy loan again later in the year for the other amount that he needed to pay himself back. And then in the second year, when he was flipping the second house, he was able to take a policy loan for the full amount that he needed. So, you know, as his system built, he'll be able to do more and more and more. I think the thing that was very, very appealing about that is when things change, it doesn't matter because you, as the person who is taking the policy loan, get to set the terms of repayment. Right. So if construction takes a little longer than you anticipated, as I'm sure that's happened to somebody out there in the real estate world, that things don't run on time exactly. So if anything like that happens, it doesn't matter because you can just choose to delay it. There's no one knocking on your door saying, hey, where's this repayment this month? It's completely up to you to say, okay, well, I'm not going to put any money back in this month. I'm going to do it next month when I know the house is going to sell, or whatever happens. You know, there's so many moving parts, as you well know, in real estate, that to have the ability and the flexibility because you have the control of that money just makes a world of difference.
So the policy starts first. So you sign up for a life insurance policy. From the payments you're paying, you're accumulating a portion where you can take a loan against and use that loan to then purchase property or
private lending or whatever you were doing with real estate. Yeah.
So you can leverage that that amount that you accumulated to then invest in real estate. And so kind of as Jason, if you may associate that with that, how does that take out the bank in a process? Is that somehow to come in and pay the debt off that on a property you own, or where is the association between those two?
Yeah, that's also a great question. The association there is that primarily the clients that we're working with, they tell us that if they're already actively investing, they already have a portfolio, they want to get rid of the banks in a shorter period of time. So if they have amortizations on these properties that range anywhere from 20 to 30 years, quite often we see people with those long range amortizations versus people who are saying, look, I've only got 3 years left to pay off on my whole portfolio. It's quite rare, but they want to get rid of the banks in a shorter period of time because they want to change the process of who's getting the money. So if they pile up this value inside of their policy or a system of policies, this is not meant to be achieved with just one policy. This is meant to get done with a system. As you're growing that pool, you're borrowing against the accumulation of value. You're going directly to the lender. You're buying down the principal balance of those mortgages using the life insurance company's money, not your capital. And so if you go back to my situation earlier, we took 40 years of amortized repayment, got rid of the bank in 7 years. So now those monthly repayments are going back into our system to repay the policy loan balance that we had built up. But every dollar that we repay is instantly reaccessible to us. So if a real estate investor understands like a matrixed mortgage, every dollar that you pay creates instant access to that dollar in the form of credit. But when you're borrowing from a commercial bank, whoever has the gold makes all the rules. So they can change the rules, they can change access, they can control the repayment schedule. Well, now you become the banker.
Yes, but prior to getting to that stage, you're at the mercy of the bank. So
that's right.
It's dependent on what they allow you to pay off. So you're paying off the maximum that the bank allows you, the contract you have.
Oh yeah, and I did even more than that. I remember on my principal residence, I'll never forget this, when it got to the point when I was in the penalty range.
Yes.
And I walked in and I'll never forget this. I said, hey, can you apply? I'm here to apply this $40,000 to the principal balance of my mortgage. Well, the teller took a look and then it was that pregnant pause. And the teller looked at me and said, do you realize that you're going to be penalized for doing this? And I said, well, what's the penalty? And she said, it's 3 months interest. So we calculated it and it was a whopping $960 some odd. And I said, well, how many years am I going to wipe off the amortization schedule by incurring that penalty? And she said, oh, you're going to knock 3 years off the amortization schedule.
The math made sense then.
Yeah, I said, well, without taking too much time, could you calculate for me what 3 years of monthly repayments would be and compare that to the penalty? And I'll leave the decision in your hands. You let me know what I should do. And so she chuckled. It was all in good humor. I said, go ahead and penalize me. I'll take the penalty all day long because I used the insurance company's money to incur the penalty.
Right.
Got it.
And I haven't met a real estate investor yet who has said to Liz, myself, or any of our amazing teammates, not one yet who has said, no, I'd rather continue to send the money to someone else's bank for the remaining amortization schedule. Not one, because they want more capital to grow their wealth, but they want to do it from a position of control, not a position of being beholden to someone else's bank, someone else's terms, someone else's qualification criteria, etc. This is all about understanding 4 characters in the financial play. You have the depositor, the borrower, the banker, the bank owner. Most of your, if not all of your listeners and viewers are only 2 of the 4 characters in the financial play. They're the depositor, they're the borrower, but they're not the banker or the bank owner. By implementing this process, you become all 4 characters in the financial play. And once you recognize the character, the one of the 4 characters that makes the most money, the banker, and you get to become that character, you're going to accumulate and create indestructible wealth.
Nice.
Isn't that good?
That sounds
No,
great.
that definitely sounds great. So now currently we're looking at one of the historically the lowest mortgage rates that exist out there.
Yep.
Now, does the math still make sense even though the mortgage rates are so low?
All day long, because we're talking about volume. Isn't it interesting that these commercial banks are making record profits in the lowest interest rate environment we've ever seen? Why is that? Because it's all about the volume, not the rate. The lender knows that the volume is what matters. That's why they have borrowers lined up from where you are to the Vancouver International Airport wanting to borrow money. But nobody talks to these investors about what happens when the interest rate lever goes the other way. And we know what's going on in the economy right now. How have the prices of lumber been recently?
Yeah, they're
Of food,
5x.
5x.
goods and services. What do you think that is going to do to interest rates?
Yeah.
Very good point.
They're going to grow. And when that interest rate lever goes the other way, there's going to be a lot of people in a lot of trouble financially because they've over leveraged, they've overextended themselves. Whereas the people who are in control of the banking function as it relates to their needs and understand volume versus rate, they're in a position of control. They're not going to be panicking. And so for your viewers and listeners, we would implore you, take a close look at this process, connect with Liz, have a personalized conversation. You'll be glad you did. Someone must perform the function of banking in your life. It should be you.
Well said. So now leveraging your life insurance policy to paying off your debt with a financial institution, is there any other kind of client avatar that can use this process to leverage it for something else? Or is it mainly used for paying off the mortgage? Is that the kind of...
It's really to recapture the money for anything that you're paying cash for, leasing, or financing. And so this process is applicable to anybody who needs the use of capital. And whether you're a household, an investor, a business owner, we deal with such a wide variety of Canadians. You've got to take a look at this. If you're not the banker in your life today, then this is a process that will absolutely be an advantage for you to embrace and to implement.
Got it.
Common questions we get around that is, can I build retirement income with this? Yes, you can. Can I use this while I'm building the retirement income? Yes, you can. Can I use this for anything? Absolutely. Anything you spend money on, you have control of this. You can use that for anything. So we have people asking about crypto, stocks. I had someone the other day who wants to use it for classic cars. It's called infinite banking for a reason. It really is for whatever you can set your mind to in terms of using it. And it's also an and asset. So it's things that you do in addition to other things. So it's not an either or thing. It's not invest in real estate or do this, or invest in crypto or do this. It's an and asset. So that's the power of being able to use it.
Great. So now, looking at it as kind of the applicant's perspective, a lot of our investors who come to us, we talk about the great opportunities that we have. We talk about the great systems we've created. And the question at times comes to us is, hey, what's the benefit to you guys? So our firm, being a real estate private equity firm, earns his living by performance fees and management fees. Now, from this sounds great, and the leverage that exists is incredible, and kind of the freedom the applicant has, and I keep calling the applicant, forgive me if that's the wrong term to use, but the freedom the applicant has is very broad. How does the insurance company stay in business? Because also they're not only allowing for this kind of leverage to be used against the policy, there's also a life insurance component, because if somebody does pass away, they have to pay that insurance off. So talk to us about that kind of from the actual insurance company's perspective.
Oh, absolutely. And, I'll walk your viewers and listeners through just a bit of a history lesson as it relates to that too, because if you think about just in the past 100 years, how many recessions we've experienced in Canada? 26, maybe 27 recessions. We've been through the Spanish flu, the Great Depression, the financial crisis of 2008-09, the tech bubble bursting in early 2000, H1N1, COVID-19, SARS, to name a few. And isn't it interesting that during each one of these events, not one life insurance company failed? If you go back to 2008-09, how many banks failed during that financial crisis? Just in the United States alone, that number is just shy of 1,000 banks.
Wow.
Not one life insurance company failed. Financial solvency is so important. Insurance companies, in particular life insurance companies, are the most financially solvent institutions on planet Earth. And they continue to produce profit year after year, decade after decade, and in Canada since 1847, so century after century. And financial people who are, financially savvy or well-educated financially, they understand that the people who are doing this, who are storing their capital inside of a company, an entity that has never failed to produce profit, when you open a policy, you become a co-owner of the insurance company. That's why the policy is participating. You participate in the divisible profit generated by the insurance company in the form of dividends every year. Those dividends are contractually guaranteed to be paid. They can't be repossessed. They can't lose value. The insurance contract itself is unilaterally binding. So anybody who invests understands contracts. The insurance company itself is legally bound to fulfill a contractual guarantee of daily cash value accumulation that must grow to match the total death benefit of the policy by age 100 of the life that is insured. So throughout stock market volatility, throughout real estate market cycles, throughout economic recessions, economic expansion, throughout all those periods, cash values just keep rising every single day. There's not a single documented instance in Canada that's ever been brought to my attention of a participating dividend paying whole life policyholder losing money. It's never happened. Now there's a whole other, what we call a boot camp, where we deep dive into how to do this and understanding the anatomy of the insurance company, the contract itself, outside the scope of this.
Yeah.
But in simplicity, these life carriers have been solvent since day one throughout all of these events that have really impacted people financially. And so understanding the fundamental truth that your money must reside somewhere. If you can store it inside of an entity that has all the benefits of what I've just shared and contractual guarantees, legally binding guarantees, how much capital do you want residing there? And more importantly, it's the greatest exemption that exists in the tax code in our country today. There's no greater exemption. You pay zero tax on the daily accrual of cash value. You pay no tax on the proceeds of the death benefit. You have total control and access. What more can a person ask for as it relates to their financial well-being?
Great point. Thanks for
Isn't that good?
That's
it's
really
excellent.
great. Yeah.
Excellent. So now let me ask you something else. So usually when you get a mortgage, not usually, but in some cases it's even happened to me, that the banker offers a life insurance with that mortgage, which will pay off the mortgage in the case of death. How does that work if an applicant, if a client already has a life insurance policy with that particular mortgage, and then now they have a separate policy with your group? How does that come into effect, and how does that work?
Well, the first policy no longer becomes necessary. because what most people don't know, it's not widely known. When the bank offers you that coverage, what they're doing is they're enrolling you in the group benefit plan of the bank. And so remember, whomever has the gold makes the rules, right? And so that insurance is underwritten at the time of death, not at the time of application. And so heaven forbid, if something happened and the bank would have otherwise denied the coverage, knowing some underlying medical condition, then the surviving spouse or surviving the estate receives the premiums back that were paid, not the benefit of extinguishing the mortgage balance. So we want our clients to be in a position of total and absolute control. And so it is quite often that we meet with clients who say, yeah, the bank offered me this coverage and I took advantage of this coverage. In fact, we have one real estate investor, he was paying $800 a month to insure his real estate portfolio with simple term insurance. We recreated the very same death benefit on a term insurance plan. We're not talking about dividend paying participating whole life coverage here. And we were able to reduce that amount to $160 a month. He was thrilled. It's because nobody told him. So again, super important that questions that come up like you're asking, which are all excellent questions, that you meet with somebody who is thoroughly familiar with how to help you achieve your objective in a better way.
Absolutely. And that education portion of it is very important. So now allow me to also look at this point as I assume as this insurance policy compounds, it makes more sense to kind of set up the policy as soon as you can. So we have a lot of kind of younger viewers who watch our YouTube show and are part of our database. Could this policy be put into place at an earlier age, or also for people who have children? Could they put this policy in place for a young adult or somebody in their 20s, so then it can kind of create enough momentum or enough kind of equity to be able to leverage against? Is that a kind of the preferred way of going about it?
Absolutely.
Definitely. Liz, do you want to tackle that?
Yeah, sure. So you can put a policy in place from 16 days old. So that's, that gives you a lot of room to move in terms of age.
Okay, perfect.
And yes, absolutely. I mean, I'm sure all your viewers understand compound interest. So the longer you have to compound money, the more advantage you're going to have. We have a lot of families who set up, their family banking system with an asset that they're building for their children, that they could use it for education, but also it's going to be a growing asset for them over time when they start to buy cars and deposits on homes and things like that, so that they keep all that money in the family going forward. So yeah, absolutely. And the most common thing people say to me is, I wish I knew about this 10 years ago.
Yeah.
Well, and your viewers won't be able to say that 10 years from now. And if I may, Liz, to expand on what you shared, is so to share with your viewers and listeners, this is something that just resonates with people every time we share it. So I'll bring it back to my own family again, just as an example of illustrating what's possible. So inside of our family, we now have 54 dividend paying participating whole life insurance policies. I have coverage on all of my family members, my nephews, my nieces, my sister, my assistant, key people in my business, to name a few. The reason that we've done that, especially for our children, is that we want to create what we've named the family banking system. So imagine for a moment when children are old enough to purchase vehicles, property, businesses, appliances, go on trips, take extended education, get married, etc. All of that requires money. So what we're doing in our family is when our children are old enough, we're going to sit down with our kids and we're going to explain to them the advantages of shopping at home. So when you need a property, when you need vehicles, when you need to buy businesses or business equipment or all the above, we want you to shop at home. Borrow the money from the family banking system so that that stream of payments for all those things is coming back to the family, not leaving the family. And we're going to provide our children with two options. The first one is to opt out. So here's option A. All four of my children have 5 policies on their lives already. So our family attorney who looks after our family and our corporate law, is going to sit down with all of our kids and say, here's what your mom and dad have put into place for you. Now, they're giving you two options. The first one is to opt out. Opting out means that you're going to shop at someone else's bank for all those things that you need to finance throughout your lifetime, which may include real estate. Now, if you choose to do that, not only will you not receive any of the death benefit proceeds of your parents' policies, but they're also going to assign ownership of your policies to charities of their choosing as part of their estate plan. Option two is that you opt in to the family banking system and you shop at home for everything. When you borrow from the family banking system, you're going to repay the system at a rate of 10% that is not subject to negotiation. The amortization period is subject to negotiation. And if you do that, you're going to gain re-access to everything that you repay to the family banking system. When your parents pass away, you'll receive the death benefit proceeds of their insurance policies, and ownership of the contracts on your lives will be transferred to all of you. Now, take all the time that you need to figure out which option is best for you. And if you agree to opt in, then we will obviously have a memorandum of understanding that's legally binding to our children, and we keep the money in the family. You see what's happened over our lives? We've been taught to be divisive. Did you both hear at some point in your lives growing up, someday you're going to grow up, you're going to move out, you're going to start your own family, you're going to have your own bills, you'll understand what life is like financially and what that responsibility is.
Yes.
Yeah.
The wealthy don't talk that way.
Yeah.
The wealthy say, circle the wagons. We want your car payments, your mortgage payments, your financing arrangements to all be part of the family banking system. We don't want you transferring money away.
Yes. Definitely.
So recognizing that you can do this, we have clients who put policies in place, as Liz said, on their newborn children, 16 days young.
Yeah.
We have clients, our oldest client is 79, just getting started.
Oh, really?
Cricket, that
That's
milestone when this opt out or opt in is when somebody turns becomes adult. Is that the adulthood kind of the milestone which to make that decision?
Once they're conceptual enough to truly understand what a family banking system means and what keeping the money in the family actually means.
Right.
We host an annual family banking meeting. Our children pick up on this much faster than adults because children have a much higher degree of neuroplasticity. They have much more plastic brains than adults do. That's why it's so advantageous to teach a child a new language at an early age. My oldest son, Jackson, he's 12. He's repaid 2 policy loans already. He's using language like, I'm keeping the money in the family. I get to re-access everything that I borrow and repay. I'm being a responsible banker in the family banking system. He's not being taught to go to someone else when he needs access to money and to repay it outside the family. He's being taught to keep the money in the family.
That's
So
beautiful.
isn't that good?
I
That was a
opt
great
in.
one. Yeah, I opt in
I
too.
opt in.
Okay, good. We'll get the memorandum of understanding couriered over to you. Right?
You're going to have to send them some t-shirts as well, Jason.
Yeah, exactly. And we all dress up. We have our annual family banking meeting t-shirts that we wear. We record the
Oh,
meetings
really? Oh,
so that the children can go back and they can watch.
Yes.
Yeah.
I love to hear that.
To structure such setting obviously takes a lot of time from your side. If a couple comes in and they have either a larger family or they want to kind of put this is there extra kind of charge they have to pay to put a larger policy in place and to make sure all the policies are connected? Because I'm sure for yourself, since you've been in this business, 54 policies, I believe you said, that takes a lot of work to put them all together and make them all make sense. You do that just part of your
That's part of the value.
Okay.
That's part of the value. And in addition to that, and you may already know this, we have what we've named a client portal. It is incredible. So our clients have 24/7 access to a treasure trove, a vault of resources, because we truly want to teach them how to become their own banker. We don't want someone to be dependent. We want to help you become independent.
Right.
And where it all began with the book titled Becoming Your Own Banker, we share with prospective clients all the time. The 2 most important words in the title of this book are right here, your and own. We want to teach you to become your own banker. Our client portal has enabled us to show up in the marketplace the way that no one else is showing up. You've got 24/7 access to all of the steps in the process, video tutorials, paint by numbers, step-by-step instructions. We make it ridiculously simple, but we're in your corner and we're with you every step of the way. Our client services team is exceptional. Our advisory team is outstanding. We have a wonderful group of people that are all there and all accountable only to you.
Beautiful.
Awesome. Great.
I
Isn't
love
that good?
I love
It's
it.
great.
Yeah.
It's great. So the
think-
educational portion of what you're offering, obviously people are watching this video and we'll be marketing the video on multiple platforms. But if they want to learn more, is there kind of, do you guys hold any events? Is there kind of you just spoke about the portal that you have after they become clients, but is there, to learn more, how can they reach out to you or tell us more about that if you guys may?
Yeah. Please.
What I would ask your viewers and listeners to do, we all carry around one of these things. And so just pick up your phone, text the word REAL, that's REAL, to 604-305-4432. Again, that's text the word REAL to 604-305-4432. We've put together an incredible package for your viewers and your listeners. We've named it the Banker's Vault. And in that vault, they're going to get some of the very best reading material on this subject, and they're going to get first dibs on the latest release, The End Asset for Canadians. This book is going to be a real game changer here in the country, and we've included it in that vault. And in addition, they're going to get the opportunity to schedule a personalized conversation with Liz and to interact with her directly, get their questions answered. So I hope that that's okay if we wow your listeners and viewers with a great offer. It's going to be absolutely amazing. The vault is incredible. You'll get the best material on this subject. You'll get access to a masterclass, which in and of itself has a $200 value. You'll get that as part of the Banker's Vault. And our YouTube channel, our podcast, you'll be invited to all of those great resources. And it costs you, the only investment is your time to consume all those great resources. The vault itself does have a price tag. We're going to keep your viewers and listeners in suspense. We want them to text to that link and get their hands on it. They'll be glad they did.
Tremendous.
Incredible.
Tremendous.
You
And we'll
guys are
add all of
great.
that below this video on YouTube,
Yes.
so you can just click a button or get that information. Hey guys, we
Thank
really
you
appreciate
so
you guys taking the time. We love it. And
We opt in.
we opt in.
All right, there you go. I love
Thank
it.
you so much. We really
Yes, we're-
appreciate you. We're very grateful to be, talking to you about this today. It's awesome.
Of course. You guys were great. And I think this will change a lot of people's lives. So
Yes.
we were very happy to have you on today.
Oh, we're grateful and very honored to be with you. Thank you for having us.
Thank you.